Hey, what's up, guys? Welcome back. Welcome to the channel. I'm still alive. I know I post sporadically, but I have an actual trading strategy video for you today. And then after the video, there's going to be a video of me actually trading with the strategy, so you can see that I'm not just like bullshitting you, right? I don't give a lot of trading strategies on this channel. I'm more of I like to conceptualize things and teach you how I would look at the market, um, then tell you how exactly you should trade it. And I don't like to cater to the newbies that think that their strategy is what's keeping them unprofitable, because you've been following me for any length of time, you know it's your risk management. You know that's what I believe, and that's kind of what I teach on this channel. Ironically, though, if I really wanted to blow this channel up and grow it like crazy, I should just make strategy videos all day, right? Because those are my number one watch videos. That and my VSA videos are my number one watch, and I guess that's a strategy too, but it's also a way of looking at the market, so it kind of satisfies both. But my strategy videos, my Bollinger Band one, like it's always at the top of the list of people that are viewing it. Like I think that's how most people find my channel, is through those types of videos. So really wanted to blow up, I should just make strategy videos. But we do things a little bit different around here. We're trying to we're trying to teach you how to think, not what to think. But I think you'll like this one. Like I said, there's a trade that I took today on it, and I've been using it, and it's pretty solid. I'm gonna explain it to you in depth. I'm gonna explain it to you different than other channels do, because it's on other channels. I didn't make it up. I didn't invent it, but I use it. I think about it a little different, or maybe I don't. Maybe they think about it the same, but if they did, they didn't explain it in the video. So that's what I'm gonna attempt to do today. So let's get started here. All right, so it's a Bollinger Band Keltner Channel strategy. That'll probably be the title of the video, so you probably know that already. But anyway, so let me tell you how I arrived at wanting to share it this way. I was watching a video. It's by Etienne. He interviews traders. If you're in trading, you've probably seen some of his interviews. But anyway, he was interviewing this lady. Her name was Sunny Davis, I think, and she's a 42-year trader. She's been doing this for 42 years. I'm only 36. She's been doing this longer than I've been alive, right? But she created her own indicator, and she called it Sunny Bands. And a big part of that, she said, it uses ATR to calculate volatility. And so he asked her in the interview, well, what is different about ATR than, what is different about your bands than using Bollinger Bands, which uses standard deviation? And she's a mathematician, and she explained it, and I had never really thought of it that way, or thought to explain it that way. But she says standard deviation is what the market can do. It's a statistical representation of the market. So if you have Bollinger Bands and they're set to a standard deviation of 2, statistically that's supposed to contain 95% of price action. If you go to 3 standard deviations, it's really supposed to contain 99.93, something like that, something really high. But she said, but ATR is what the market is actually doing. Okay, and I thought, so that's why I started looking more into Keltner channels, because they're ATR bands. So above and below this center line, which is a 30-period moving average, above and below this center line is 2 ATRs. Okay, it's an ATR of the center line, of the 30-period center line. And I use the 30 instead of the 20. I use it for my Bollinger Bands and my Keltner channels. So it's a measure of what the market is actually doing. How big have the previous bars actually been? Have they been 5-point bars? Have they been 2-point bar? So this is more of a representation of strength and volatility than the Bollinger Bands are, because the Bollinger Bands are just like a guess. Okay, we're going to create these bands around it. We're going to expand based on new information. And if we keep it at 2 standard deviations, price should stay inside the bands. But it really doesn't help you with seeing if the market is speeding up or slowing down. Okay, what Keltner does, the Keltner channels do, is they're really good at showing you that, okay, for the last 30 periods, this has been the standard move. Okay, it moved to ATR in this direction, and then it moved beyond that. All right. So if you're looking at this, does the market look like it's speeding up, or does it look like it's slowing down? If you think of mean reversion strategies, you can see that this market has it's way past its mean, basically, and it's past its mean to the other side. It's past its mean to the downside. So when you add Bollinger Bands to it, okay, Bollinger Bands expand very aggressively. Okay, their goal is to try to keep the standard deviation, germane to the price action. So he says it all the time in his videos. John Bollinger, prices is low at the lower band based on the period that you're following, and by definition, price is high at the upper band. Okay, so this is like I said, this is nothing new. This is not going to, this is not going to break any new ground or anything. But this may get you to thinking about stuff. So one of the strategies that you can implement with this, and I use it now. I'm not going to explain it I'm not going to get too much in detail. There's tons of videos about it, but it's called the Keltner Bollinger squeeze. Okay, and what happens is, since the Keltners are ATR driven, and they're showing you the volatility of the actual market, and the Bollinger Bands are standard deviation driven, they expand at different rates. Okay, so what you want to see is the Bollinger Band get squeezed into the Keltner channel, because that shows you that the market is taking a break. The market's going quiet. The market is preparing for its next move. Okay, whenever you see a range, guys, and you see it, and I talk about this in other videos, but you see a range tightening. Okay, there's orders being put in above and below the range. Okay, there's a range, and there's orders being entered above and below the range, and that's what makes breakouts happen, because when they decide to go in another direction, they have created enough liquidity on that side to break the structure. Okay, so squeeze, and then you want to see an expansion. Okay, squeeze, expansion. Okay, squeeze here, expansion. Squeeze here, expansion. Okay, big expansion here. Big expansion. Okay, we get back, squeeze, squeeze, expansion. So what it helps you do is it helps you know when you can expect a big move. Okay, the Bollinger Band squeeze and the ATR, the Keltner channel, lets you know when you can expect a big move, because the market has gone quiet. It's building up energy for the next push. Okay, wherever that direction. It doesn't really tell you direction, but you can figure that out from other things. But what you'll notice though is that if you put this on two charts side by side, what you're getting ready to do, I like to use the bottom or the lower time frame as a momentum time frame. Okay, I like to use it as let me just go to the chart and show you. So because we talked about this in another video, it's the structure video. So you could be looking at this right here. Okay, you could be looking at an uptrend on a smaller time frame, right? And you could say, oh, this is a really strong uptrend. Okay, but you wouldn't feel the same about that uptrend if you knew, okay, that it was just part of a bigger downtrend. Okay, so this uptrend now doesn't look like you should be playing it up, because it's part of a bigger downtrend. You're not in an uptrend, because on a larger time frame you're in a downtrend. Okay, so that is where this really shows you. That's the principle of all this. So I like to use two time frames, and I like to see if the Keltner channel, what is the momentum of the Keltner channel on the smaller time frame. Okay, when you look at a series of candles, all right, the the reason candlestick price action is so important is because you could be looking at an overall move, but when you look at a candle, you're looking at the same move on a lower time frame. So we talked about this in another video also. When you have a candle, when you have a move up like this, boom, boom, boom. I know these are red, but just bear with me. Boom, boom. You have a trend, right? So that candle looks like this. Okay? This candle looks like this at one point because it started here and now it's here, right? When you then start to tick down, boom, 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 this candle now looks like this with a long wick at the top. Okay? So you're getting the micro trend structure on the time frame that you're watching. You just have to train your eyes to see it. Okay, this Bollinger Band, this helps with that because this can show you momentum on the down on the lower time frame. So the 1 minute has to change before the 5 minute does, and the 5 minute has to change before the 15 does, and right? Because the candles are all connected. 5 1 minute candles make a 5 minute candle. So you're going to see movement on this 1 minute candle before. Look, it's contracting right now. See that? It's contracting right now and it's expanding. See how it pulled back into this? Look at all that space in between. That's really tight price action. And now it's expanding again. And the Bollinger Bands are going to expand outside of the Keltners. But anyway, so if you are looking at a time frame and you ever, well, it probably happens to you all the time. It happens to me all the time. It used to happen a lot more. You see a trend going, and then as soon as you buy or sell, it starts to reverse, right? And you're just like, every freaking time I get into the market, it wants to reverse. Well, that's because on the lower time frame, they have exhausted themselves, okay? On the lower time frame, the people creating the momentum are tired. So you have to take a break. What that looks like is typically you're in a wide state down here. You're outside the Bollinger Bands. You're outside the Keltner channels. And you're down here. For instance, right here. Okay? So you see this big candle come down. You sell when it breaks below here. And then you don't even get a point out of it before it reverses back. But it's reversing back to, it's reversing to the top of a range on a 1 minute chart. If you look at the 5 minute chart, this doesn't look like much of a reversal, okay? But if you know that, okay, I don't want to buy down here. I don't want to buy in this half of it, okay? If I want to go short and the momentum is short, I want to try to get short up here. Because up here, if the momentum on the lower time frame is still down, it's going to drop back, okay? Now, what's cool about these Keltners is they will give you a good indication of when the trend is getting weaker. So if you look at this move pushed down, hit the center, came back down. You want to see most of the trades in your direction. If you're in a trend, you want to see them be able to hit the center line on the lower time frame and then come back down. Hit the center, come back down. The weakness that you'll see in the momentum of the trend on the 1 minute is when it's able to cross this band and even make it to the top of the band. And you'll see me talk about that in the trade video after this. So this then started to weaken. And what did it do? It was able to stay above for a little bit. So if you had sold here, like I said, you would have had to sit through all of this before the breakdown. But had you sold through any of these at the top of the band, wanting to go short, you would have been very pleased and you wouldn't have had really pretty much any drawdown, okay, because you're selling that momentum. Also, if you look on the 5 minute, there was a chance right here where it had broke its uptrend, had come down here outside of the band and had come back up and tested this. So I'm looking for areas of the chart where this one is looking bearish and this one is looking bearish, okay? What you'll see in the video is I take it a few steps further and I look at multiple charts, multiple time frames, because I want to see how price is playing out in relation to the larger time frames. Because we can be in an uptrend and a larger downtrend. We can be in a downtrend and a larger uptrend, right? So I want to see how far away are the larger time frames in this context? How are they doing? So, for instance, on SPY today, we gapped up. This is the 15-minute time frame. We gapped up. Okay, volatility expanded very aggressively, but we even gapped up outside of it. So we're outside of 2 standard deviations on the 15-minute. Okay, I wouldn't be buying up here, and I didn't. I would be shorting here. Okay, I would be shorting here because I'm expecting that this is going to return, at least if it wants to continue up, it's probably going to return to the center line. And if there's more stuff down here that's telling me it's going to return, like here we had a gap that it needed to fill, looks like it will fill that gap, okay, or something like that. But the main takeaway from this is I'm not buying up here, okay? I'm not buying up here. I want to get a better deal, all right? And if I think I'm going to get a better deal and I can be patient, then I'm going to wait until it comes back inside of the Keltner channel. Now, if I start to see, if up here, okay, if up here on the 15-minute, way up here outside the band, but down here on the 1 minute, I'm starting to see this. Let's say I'm starting to see this down here on the 1 minute. Comes down, breaks through, comes back up, breaks through. If it comes down, tests, comes down, and it can't get back to this line, and then it just keeps breaking up, momentum has shifted on the 1 minute chart. And then I might think, okay, they don't care about this gap down here. They want to continue up. But today, if you even look at the 4-hour chart up here, it was also way overextended. Okay? It's outside of its Keltner. It's outside of its Bollinger band. All right? This has to return back to here. It doesn't have to, but the probability, and you hear me say that during the trade, the probability of this going higher from here after 2 consecutive days of gapping up is lower, okay? So everyone that's FOMOing into this move, they're probably going to be trapped, all right? Because they're going to take profits up here because we're outside of this Bollinger band on the 4-hour. But look at this here. Let me go down to just 3 charts here. Okay, so I got the 1 minute, the 5 minute, and the 15 minute. So I want you to look at the different stages. Okay, look for your long-term time frame for momentum or for direction. Okay, so the direction is clearly up, right? It's clearly up. But look at your short-term time frames for momentum. Okay, and momentum's going to show you. It's going to help you with your entry because you can get this direction right, guys. You can get it right. But if you're selling down here to go lower, you're going to be burned. If you're selling down here to go lower, you're going to be burned. You want to see price retrace to the center line, which is the 30-period moving average, and then sell off again. This is a much better sell than this, okay? What's an even better sell is this up here, okay? This up here that creates a higher or a lower high. So if price were to come up here, lower high, pull away, this is a better sell, okay? It's also a better sell because now you're at the center line on the 5-minute chart, okay? Does that make sense? So you would expect to ride the band, to ride it back down, all right? So if you are going to be trying to enter the market, you won't want to enter it in a wide state and then expect a big move. Okay, what you want to see is you want to enter in a narrow state and then expect to go to a wide state. You don't want to enter in a wide state because the energy's already been expended. Okay, it's going to have to pause and rest for a little bit. Okay, so this here is a narrow state, and you see we've now expanded down. Now it's in a wide state. If you know that you're in a wide state, can you expect another big move? The answer is no. If you know you're in a narrow state, you can expect a big move because they have already rested. Okay, they've rested significantly. But in this particular scenario here, they haven't rested enough on the higher time frames for them to take over and think about buying. If you're up here on this 4-hour chart, no one in their right mind is trying to buy this up here on this 4-hour. Okay, and if you just look at this historically, when it gets outside of the Keltner and the Bollinger Band, it doesn't stay up there for long. It doesn't stay up there for long. What did this do? It came back down, tried again, lower high, came back down to the center line, came back up. This was a good short right here. This was, and this was, okay? And then we broke through this, okay, and came down here and ran down here, right? Tested the bottom of it, broke through again, came up, was able to get a little bit higher, but then broke down again. So if I'm looking at a larger time frame, let's check this area out right here on a smaller time frame. Check that out right there. Let's make it white so you can see it, because this would have been a good short. Okay, let's go here, right here, and it's going to be huge on this time frame because this is a 4-hour and this is a 5-minute. Okay, but I just want to show you how there's optimal entries into this trend and how there's entries that you should stay away from. So let's look at this. So this really starts here. And this looks like a mess. This really starts here. In any of these periods on the 1-minute chart, okay, if you sell, let's do this. The 4 hours probably too big to be, no, I don't want that. Okay, the 4 hours probably too big. Let's see, let's go to the 1 hour here. Here we go. We're outside, remove drawings. We're outside of the Bollinger Bands right here, okay? So we should be thinking more down. Now, that's not saying this can't run up and up and up and up, but the chances of it doing that after coming from a narrow state are lower, okay? The chances of it doing that are lower than if it had just been riding the band all day. It came from the bottom band. It came all the way from the bottom of this band here. It's already exerted a lot of energy to get up here. So I would expect it at the very least a pause. All right. So it comes up here. Comes up here, right here. Okay. And then what do you see here? It's above the band, the momentum chart. It's above the band on the 1 minute. And then it starts to break down. Okay. It doesn't break down and come down here and then go back up. No, it pushes through the 30 period on the bottom. The momentum is so strong, it's willing to move 2 standard deviations on the 1 minute to the bottom, right? And then, okay, you would expect buyers to appear, which they do a little bit, but you would expect them to appear enough to take it back up, right? But they don't. They appear enough right here to just take it to the center band right here, okay? And then they pull away again, okay? And then when they get ready to retrace again, they can't even get to the center band. You see that? They push all the way down, base a little bit, and then push down again outside the Keltner channel. At the same time, what's happening here? What's happening here is they're refusing to buy on the higher time frame right here. Okay, so when they pushed up here, pushed through this, they were pushing through the center on here. And do you see how this is contracting here? See how this is inside, the Bollinger Band is inside the Keltner? Look how it contracts and then expands to the bottom side, okay? Contracts here, they're inside, and then aggressively expands to the bottom side. So the key takeaway to this is you can use as many charts as you want, okay? Give the weight to the higher time frame. Something happened after the Fed announcement last week, and I'll show you this and then I'll get to the trade and end this video. The Fed announcement, where was it? Let's go to here. When was the Fed announcement? I think it was here. Yeah, it was here. So I'm going to put a box around this move right here, okay, so I can highlight it on all the charts. All right, let's go to the 4 hour though, and let's go to the 15-minute, and let's go to the 5-minute. Okay, so Fed announcement came, okay, it was initially bullish, came outside the channel, and then became bearish as he talked more, okay? So the more he talked, the more the market fell. But look at this here. On this chart here, before the Fed announcement on the 5-minute chart, we were kind of squeezed up a little bit. Kind of squeezed up, and then it came all the way from the bottom band, broke the top band. So if I missed all of this, I'm not buying up here and thinking that it's going to continue. Okay, because right now the momentum is telling me that it probably won't. I would wait for it to come back down here at least to buy. And of course, it did come back down here. It came a little bit lower, so you still would have had to fade about 14 points. But that's better than buying up here and having to fade 34 points, right? So it pushed back up, but then when it came back down, what happened? It aggressively broke through the center line, showing you a loss of momentum. Came back to the center line and then really sold off. I caught most of this move down. Okay, this chart here though, let's see here. The 15-minute chart was then very, very oversold. Okay, according to volatility, standard deviation, and ATR. Okay, but look at this chart right here. This is what made me go long the next day. It was the hour chart actually. Look at the hour chart. Look at how much the hour chart had come outside of its band. And we can look back and we see that that does not sustain very long. It'll come out for a little bit, but the Bollinger or the Keltner will eventually catch up. Look at that squeeze there. Beautiful squeeze there. Got quiet, boom, expansion. But look, go back. Anytime you see it come out, it does not stay out for very long. Okay, so everyone's thinking down because they're stuck in their tunnel vision at this chart looking down. And then what does it do overnight? It just starts to trend up all night long. It just starts to trend up all night long. Okay, so look at the 5-minute. Okay, look how it starts to trend up. If you were looking at the hourly while the 5-minute gets bullish, okay, if you're looking, let's just look at two charts here. Let's look at a big one and a small one. If you're looking at the hourly, when this chart starts to get bullish, you would understand this bullish move. Okay, you would understand why it's bullish here, because the hourly chart is very bearish. The bears on the hourly chart need a rest. Okay, they need to take profits, or they need to just wait and see how much buying is going to come in. So this starts to push up. It reclaims this first band, reclaims the center band, gets to the top of the hourly ATR band, and then what does it do? It sells off again. But here's the cool part. Look at what the 5-minute is doing. Look at how overextended the 5-minute is. Look at the momentum on the 5-minute. It just climbed all the way in a narrow state, expanded to a wide state, way to the top of this Bollinger Band, when this is now at the top of its Keltner Channel. And then you see it start to give this up. Okay, now down here, when it comes down here, this is enough for me. Okay, this movement from here to here is enough for me. It's 25 points. Okay, but you'll notice now that this 4-hour is not stopping at its midline. It's continuing to run down. So it continues to run down. But you get a chance to rejoin that trend on the 5-minute chart when it tests the bottom of its band and it can't get back over it. So then it just rides the band all the way down. So you have a chance to get in here, here, here. You really want to try to get in right here though, at the top of its band, okay? Or right here, the top of its band. But as you see it now getting squeezed up again, you can now expect a movement on the lower time frame. As it gets squeezed up again and comes outside of its band, let's look at this point right here. Where is this point right here in price? It's right here. So it's below its 30-period moving average, coming back to test it. Once it tested it right here, right here. Okay, once it tested it right here, okay, this was your other entry to get in right here. When it pulled down, you didn't want to sell below here because you would have had to sit through a 11-point pullback. But if you waited for the 5-minute momentum, okay, to change, for them to try, the bulls try to push back up to Keltner, to the middle Keltner, and they fail before they get there. Okay, this would be a nice short right here. Okay, and it would also coincide with this right here. So then you could have got all the way down here, and then you had another opportunity here where it couldn't even get to the center band, and then sold off again. Okay, but the point of the story is, if I could sum this all up before I show you this trade, you don't want to be trading a higher time frame idea without knowing what the lower time frame, what stage it's currently in, because you can have a really strong rallies in the lower time frame that will hit your stops, and the higher time frame bias can still be in effect. Okay, so I think that's enough. I think I've rambled enough. I think you get it. Let's go to the trade that I took on it today. All right, we're in this SPY trade here. The reason I'm selling this is because this hourly chart over here is way oversold. I'm saying way overbought. It's moved. It's gapped up. It's got two gaps on the bottom. Gapped up to the edge of the Bollinger Band and the edge of the Keltner Channel. Way past that. It doesn't typically stay in this area for long. So I'm expecting it to want to come back down to the center line to get some more momentum. It's $7 away here. Might not do that today. These options expire today, but the chances of it going higher from here are way lower than the chances of it coming down here. So that's what I'm planning on. Using the Keltners and Bollingers on the lower time frames to see momentum, how it's shifting back and forth. We've had a momentum shift to the downside, broke through the Keltner, broke through the Bollinger Band, came outside here, pushed back up. Couldn't put in a new high though, fell away again, found support at the center line here, went back up, but couldn't break even this level here. So I'm expecting it to at least come back down to the edge of the Bollinger Band and the channel. This is the 1 minute, so I think it's going to just, move up and down until this 5 minute retraces, and I'm thinking the 5 minutes going to have to come back down here, maybe even fill the gap to find enough momentum to get back up here. But the hour is definitely in trouble. The hour is up here, and if you notice, just go back and see it doesn't stay up here for long. And I'm getting wicks. This is a big wick here. Wicks to the bottom showing that they bought this, but I think for liquidity's sake they're going to want to come back through here, get all the people that chase this move up, and then go back up. So we just look at the overall hourly. It doesn't really stay out of the Bollinger or the Keltner for long, and it's right now outside of both. So really strong gap up, but if they're not, taking this up, here's another part it was out. And I also believe the longer term time frames are kind of pushing up here. A little bit more room to go to the top of the daily one. And the weekly just found support a couple weeks ago. So, but I still think that one of these charts, look at the 4 hour, it's out of whack too. One of these charts, the longer time frame people are going to be taking profits, and I think we're going to be at least trying to return to this area right here, center band right here. So that's what we're betting on. Let's see if we get it. Options expire at the end of the day, so not a lot of time, but I think the move, if there's going to be one, it's going to be quick. Sold about right here. This is a good signal bar right here, though. So I see a really good signal bar. I need to keep that there. It's a really good signal bar. And that would have been a good trigger bar too. So I think we're in the right direction. Let's just play it out and see.